Hi everyone, and congratulations for almost making it to September 15th deadline. We just have a few more days to celebrate a huge accomplishment, 2024 business tax extension deadline. But what happens if the business tax return is not filed on time? So in this video, I'm gonna go over the huge penalties that partnerships and S-Corp tax return will be faced. Then I'll talk more what to do if the tax return was filed late. Also, I'll go over some US tax courts cases related to this topic, which will be very interesting. And then I'll end with what I think is fascinating, not so boring question. When does IRS goes after partners of the partnership for late filing? So let's dive in. Before I start with the topic, I wanted to introduce myself. I am Kat, CPA with more than 10 years of experience working in all potential companies that you can when you're a CPA. I was working at Big Four, I was working in music management, I've been running my own tax preparation business for the last 5 years. So on my channel, I want to share the knowledge so you can become a better tax preparer. So please subscribe to my channel and check out my website for courses on how to become tax preparer or learn new tax software. Let's start with the topic. So I'll start with what is September 15th. So September 15th, it's a 6 months extension from March 15, and March 15 is the initial tax deadline for S Corporation, Form 1120S, and Partnership 1065, right? And let's go to IRS website so I can show you what the penalties are for filing late. When we open IRS website for S Corporation, we can see that late filing for returns for S Corp is $245 per month, multiplied by number of shareholders up to 12 months. And sometimes S Corporation does own some tax. This is very unusual, and usually it's related when S Corp was C Corporation before. So that's just something to know, but let's not focus on this because it's very rare that S Corp actually pay taxes. And there is also a minimum penalty that if it's late more than 60 days, you pay less of a tax due or 5/10. So it's like a minimum penalty they have. On another hand, for partnership, it's actually the same, which makes sense because for S Corp we have shareholders, for partnership we have partners, the same idea. And partnerships and S Corps, they deliver K-1s to their shareholders or partners. So same penalties, $245 per month, multiplied by number of partners up to 12 months. So a part about tax, partnership doesn't pay tax, so they don't have anything mentioned about tax. Another, I think, very, very important thing to mention, there is a failure to furnish Schedule K-1 or K3 as well, timely. So for that, there is a penalty $330 per Schedule K-1 and Schedule K3 if failure occurs. So it's late, missing, or incorrect K-1. If intentional disregards, they have the penalty is $660, 10% aggregate amount required to be reported, which is greater. So there is no max cap for S Corp, but for partnership, the same amount, but they have annual max amount penalty. It depends on the gross receipts. So you can see there is a 3.9 million for gross receipts over 5 million and 1.3 million cap for gross receipts 5 million or less. And if an intentional disregard, the same idea. Going back to our conversations, the penalties are huge. Imagine the partnership. So the late filing penalty is $245 per partner. So we have 10 partners, $245 multiplied by 10 partners would be $2,450, and just multiply late 2 months. So we filed 2 months late. So now the penalty is $4,900. That's a lot. It's crazy, right? So make sure to file on time, and I'll talk more about what happens when we file later. And the second example for late filing for furnishing K-1 to the partner. Imagine scenario when a partner enters partnership mid-year and we just forgot to get the address, right? Or email address, and we didn't send the K-1 to the partner. So that's kind of would be example of that 330 per partner late filing, furnishing K-1, I'm sorry. So yeah, crazy, huge. Yes, make sure you understand how important it is and how important September 15th deadline. So first, before jumping into tax court cases, I want to discuss what do we do if we receive this letter from IRS and we filed late. It's very not pleasant, right? Ever receive, I mean, I'm sorry, but any correspondence from IRS, anytime I open my mail, I see IRS on the header, I was like, oh no, what happens? And I'm a CPA, I know how to deal with them, so I can imagine how other people feel. So I'm sorry, but it is solvable. Majority of things are solvable. So for example, we filed late, right? What is our reasons then? I mean, first of all, file as soon as you can. So if your client didn't provide you information, but they did in October or November, file as soon as you can. Second of all, if you did receive that letter, so there's a couple ways to go about it. We can go and respond to that letter with a penalty abatement request, which can be for specified reasons, right? It has to be some reasons that, and one of the reasons would be like, let's say the partnership did it for a first time, and then there is a letter presentation that say, we're so sorry we did it for a first time, but all our partners filed their tax returns on time. That can be a reasonable cause. Also, we can blame it on CPA. That can sometimes work if there is a reason for it, like you trusted your CPA to do it and they didn't do it and they told you they did. So that can work. It not necessarily will work, and I'll explain in a tax court cases later, because that's actually a case. And that's kind of what it is. So reasonable cause, responding to the letters, explaining why. Often what happens, we filed extension and IRS rejected it. That actually happened to me recently. So you need to provide that information to IRS, and that's actually a good reasonable cause. Why is it rejected? That's another question, because they might ask you to send them more information. Like, for example, S Corp can be rejected because they think you're not S Corp. They might think you're C Corp or a partnership. Maybe you never filed or they never received S Corp. But I'm not going to go get into that right now. Let's go to the tax cases. Tax court cases related to late filings, because they are very related what I'm trying to tell you now, and I think you'll get more out of those tax court cases, more just me talking right here. So let's dive in. So the first case will be Battle Flat LLC versus United States. So this one actually is about reasonable cause. So the case facts, Battle Flat, a small partnership, filed 1065 for 2 years, for 2 tax years, 6 months late. It has also previously been granted penalty abatement in prior year. The rule in questioning, so they were trying to ask for forgiveness one more time, because of some other reason. So there is this revenue procedure 8435 that there is a reasonable cost exception for partnership with 10 or less partners, but only if the partners properly reported their share in partnership income, deduction, and credits. So the outcome of the case, the court sided with the IRS, upholding since not all the partners had timely filed their individual tax return. Battle Flat LLC didn't qualify for reasonable cause exception, and the penalty was upheld. One of the ways to ask the penalty to be removed, waived, is to tell IRS, all our partners filed on time, but if in reality they did not, it's not gonna work. So remember about that, and that tax court is an example of potential scenarios that can happen. Let's go to next one. So next one is really interesting. It's about taxpayer held 41% of LLC, a partnership. And partnership filed Form 1065 and issued Schedule K-1. Issued Schedule K-1, but the taxpayer did not report the income on his personal return because he received no cash distribution and claimed he never received the K-1. The tax court held the partner was taxable on distributive share despite not receiving actual K-1. lack of receipt didn't relieve the filing or reporting obligation. So reasonable cost, penalty issues, they are separate. So this one more is about they sent you K-1, you didn't receive it, right? It's more from individual perspective as a taxpayer. So now we're not talking about partnership as much. We just think it's like, I am a partner and I didn't receive K-1, and I faced the penalty for underpaying the tax, probably, right? So I can't go back to them and say, oh, I didn't do it because I didn't receive K-1. That can not, it might work in some cases, but for example, this court case is showing us that most likely it's not gonna work, because as a shareholder of an S Corp or a partner of the partnership, you are responsible for making sure you include that K-1 on your tax return. So in the end of the day, that will be taxpayer fault, not necessarily partnership. And just one more time, I'm trying to explain what happens not on partnership level here, but more on individual tax return. If your client ever asks you, it's like, oh, I never received this K-1, why would I include? And you can get back to them and say, oh, you actually do need to pick it up, and eventually IRS will potentially issue penalty, especially if it's in income. I think I would be okay disregarding if you know there is a loss and we didn't include additional loss. That's okay, but omitting the income, which means paying less taxes, can be a problem. And the last court case for today would be, it will be really interesting. It's Lee versus Commissioner in 2023. So basically, case facts. The taxpayer Lee replied to his tax agent to file his tax return, including Form 1065. The agent failed to file the return and provided a fabricated, faked confirmation notice from IRS. That's crazy. The issue, Lee argued that his reliance on his agent should serve as defense against late filing penalty. Like basically saying that, oh, I relied on my CPA and that's their fault. So the outcome of the case, the court rejected Lee's argument, stating that the duty to file tax return on time lies on taxpayer, not an agent. The court noted that Lee settled his negligence claims against his agent, but that didn't extend, he still has liability to the IRS. So it highlights cases the agent misconducts, the ultimate responsibility of time in filing remains on a taxpayer. So I get it, it feels unfair, right? Somebody fake documents how a taxpayer knows. So that's why, please, like if you're a taxpayer or planning to file your tax return, go with reputable CPA or EA or somebody that is reputable, so you know they're not going to fabricate those documents, because it's a big deal, and in the end, unfortunately, I don't know if it's fair, the responsibility still lies on the taxpayer. So I hope that was interesting, exciting, it moved you in many ways. It's a good question. What is fair, what is not fair in this world? So my goal is to provide you with real example of what happened, so you can protect you and your clients from situations like that. And now I want to talk about interesting questions that I actually was asked that I didn't know answer to, and I did my research. So the question is, when does IRS goes after the partners for late filing of a partnership tax return? So I did a little bit research, because I was like, okay, so the partnership have these huge penalties, and the partners, like what's going on? What's going on later? So based on my research, the whole idea, right, to create a business entity so it protects the partners. So in majority of cases, if you talk about limited partnerships and LLCs, which is limited liability companies, IRS, I'm so sorry, I stumbled for a second just to think about it, because I think that's so wonderful. IRS doesn't really go after partners or shareholders in this situation, because partnership, LLC, limited liability partnership, for S Corp it will be something LLC. The whole idea is to protect partners and dissociate them from a business. So IRS will go after partnership, will keep sending notices, potentially, maybe go after partnership's bank account and whatever they own, but it's not going to go after partners. So that's a good news, and actually will be a good opening line, because next video I'm going to make and post next year will be about S-Corp election and why it's wonderful to do it. But if the partnership is a general partnership, right? IRS can go after general partners for any liabilities that partnership has, which is tax liability is also a liability. So, but majority of partnerships and S-Corps in this world, they are limited partnerships and LLC. So they partners don't necessarily need to worry about that as much. It's not going to affect them directly. All right, I hope that was helpful. Like I said, comment below, subscribe to my channel, send me an email. That would make my day. Have a wonderful day, and congratulations for almost accomplishing 2024 business tax final tax return deadline. And have a wonderful day, have a wonderful week, and yeah, thank you.